What's up guys, welcome back to the channel. In today's lesson we're going to talk about order blocks. You know what we do in the financial market is we look at possible reversal areas to trade from. We look at areas where price could possibly reverse from, and order blocks is one of the areas price could actually reverse from. And what we usually see price do when it returns back to an order block is price comes back for mitigation, and after this mitigation we see price continues in the direction of the trend after the order block has been mitigated. So let's talk about order blocks, and this particular order block is not actually the regular order block we talk about. I've also talked about this particular type of order block last year when I was discussing about profitable patterns. Okay, so this one is actually a very profitable order block which you could look to trade from. So this is what we're going to discuss in today's lesson, and I will try as much as I can. Let's do this quickly. Okay, so this is me, Solomon Wisdom, and here is actually Born to Trade. What we do here is we talk about smart money concepts and how you can make money from the financial market. So if this is what you're interested in, look to subscribe to the channel, and if you have interest in joining our free Telegram community, the link is in the description. You can look to join us today. So let's talk about order blocks. Okay, like I said, order blocks are areas in the market where we do see possible reversal in the market, and some other areas price can actually reverse from. Price can actually reverse from a breaker block. Price can reverse from your fair value gaps, supply and demand zones. Okay, but today let's talk about order blocks. Now if you look at the sketch we have right here, this very first one we have at this particular area, what you're going to see is that at this point we have price pushing to the downside. And one thing you need to understand, if you're totally new to smart money concept or ICT trading, is structure. Okay, this is what you really need to understand. Now at this point we see price push to the downside, we have a reversal and a continuation to the downside. Now at this point, if you're a smart money trader, you're going to mark here as your break of structure, and someone is going to see me mark X and is going to ask, why is this labeled X? But initially this is going to be labeled what? This is going to be labeled as a break of structure if I really want to identify that this is a break of structure to the downside. But at this point what we see is that we have a reversal to the upside which takes this lower high, because you see this is our lower high before the lower low was printed. Now as always, the expectation is that price is going to continue to the downside and we're going to get another break of structure. But in this case we see price takes this lower high and we see the continuation to the upside. So this is why you see me mark here as a sweep of liquidity. So at this point this break of structure is going to serve as a sweep of liquidity for me, because price takes the external range liquidity. After the external range liquidity was taken, we have this reversal to the upside which price takes this high to give us a market structure shift. So if you have interest, you can actually mark here. So these are market structure shift right here. That signifies a possible shift in structure. Now looking at how you're going to identify your order block in this case, because what I'm teaching you is actually a different kind of order block. So in this particular one we're going to identify our order block at this point, because right now we've seen price shifting in structure, and from what you can see we're having this institutional candle where price is moving with multiple bullish candles, and these candles has large bodies pushing to the upside. Now in this case you're going to know, okay, we're actually going to have a zone right here. We actually have a zone which we're going to look for price to come back for the retest. Just like I said, order block is one of the areas we see price reversing from. When price comes back to another block, it does what? It mitigates it. We see a reversal, right? So this is why we trade from order blocks actually. Now in this case we're going to mark our order block. Now the way I mark this my order block, this is what I call a profitable order block for me, because in this case firstly we have a sweep of liquidity. That means the retail traders who have their stop losses at this low, price takes the stop losses and we have the reaction to the upside. Now we're going to mark our order block. Okay, now if you ask a lot of people to mark their order blocks, you're going to see some people having interest in selecting this order block right here. This is a very good order block, but this is actually a refined order block. This is not actually the main order block in this case. In this case the main order block is actually the series of candles that swept this low. So looking at the series of candles that swept this low, yeah, this is actually the first candle and this is the second candle right here. Now if you have interest in marking your order block, this is what your order block is going to look like. Okay, this is actually what your order block is going to look like. You're going to look to include the first candle and the second candle that swept the liquidity at this particular low. But as always, we usually look to refine our zone, because trading from large order blocks is not going to be favorable to our risk management and maybe our risk to reward ratio plans. Right now in this case it could be refined. Personally I might refine to the bearish candle we have right here, because you see this bearish candle took charge, swept the liquidity at the low. This was actually the last candle that swept the liquidity at this low before we start seeing the possible reversal to the upside. And if you really want to go further and refining your order block, you can look to refine to this particular candle. There are other ways this can actually be done. What people usually do, some people go as far as using the main threshold of the order block, where we see some people measuring with their flip tool, measuring the whole order block, and you can see the 0.5 level is the main threshold of this order block. So you're going to see some people looking to trade from that main threshold, and you're going to see it being marked out this way. You're going to see a lot of people marking that area out, looking to trade from that. So you see people mark the main threshold, and this is actually going to be their entry. They're going to enter from the 0.5 and look to trade to the upside, right? And you see a lot of people looking to trade the whole order block, where a lot of people doesn't really mind trading from the main threshold. You see them looking to trade maybe from the high of the order block, stop loss below the low, and project their targets, right? And you see a lot of people coming for zone refinement, just like the first zone I marked. And remember, I didn't say this order block, that is the smaller one, I didn't say it's not actually correct. It's a good zone, but I'm actually showing you the main order block, okay? Because the series of candle that swept the liquidity is your order block. Now, if you look to refine to this candle, because it was after this little candle we see momentum kicked into the market fully. This is actually a very nice one, and this is the best type of order block I trade. I trade other types of order blocks. This particular one has the highest win rate for me personally, okay? I'm teaching based on my own personal experience, and the examples I'll be showing you in this lesson are trade I actually took, so you know that I'm actually teaching what I'm trading, right? The major thing I want you to note is that this type of order block firstly has to take liquidity before the reversal, right? And in this case, this particular one is a reversal example, okay? Because you see price was actually in a downtrend before we start seeing the reversal. So let's see this particular one by the right hand side. In this case, this is actually a continuation, because price was in an uptrend, it continued with its uptrend. Now, what I almost missed in this particular example is that we usually wait for a retest, right? Because I said price usually retests an order block. So when you select your order block, what you're going to expect is that the price is going to come back to retest that order block, and we're going to look to trade to the upside. And there are different ways price usually comes back for this mitigation. The retest I'm talking about is what we call mitigation, and you can actually learn about mitigation to understand what mitigation means. Selecting the order block that sweeps liquidity is not actually the only thing you do. There are a few other concepts you usually look at to make sure that our order block is actually a high probability one. Firstly, we like to see inefficiency, and you can see price left an inefficiency, and how price returns back to our zone is actually very, very important, okay? That's very, very important. Now, talking about mitigation, in this case, when we see this market structure shifts, because you see price shift in structure after this particular bullish candle closed above this high, in some cases we do see where price rebalance an order block immediately. So some cases we might see price comes back deeply to retest this order block before the continuation. We do see something like this after the shift in structure. Price might come retest the order block immediately, because we're seeing this mitigation, it mitigates and a reaction to the upside. We do see things like this, and in some other cases price might actually not retest. Price might take time to return back to this area for the retest before the continuation. So we don't usually have a specific way price usually returns. All we have to do when we mark our order block is just to wait, okay? We wait for price to come back for the retest. Now let's look at this particular example. Remember, the first one is actually a reversal pattern, and in this case let's look at a continuation pattern where price continued. So in this case, we're actually in an uptrend. From what you can clearly see, price is in an uptrend. See this reaction to the upside, and now we're getting a pullback, which is something we usually see in the market, and now we have a continuation to the upside where price breaks structure, right? So you can actually mark this as your break of structure if you really want to identify that. So these are break of structure to the upside right now. And from what you can actually see over here is that price accumulated a little while it was retracing back into this range, because this was our trading range, the high of the range, the low of the range. So when price was retracing back into the range, we can actually say when price was correcting back into the range, we see price accumulates a little before price moves ahead to break structure or to close above this particular high. What you clearly see is that we had another manipulation in this case, okay? You see price returns to the downside, sweeps the liquidity at these lows, because this looks more like relative equal lows. Price sweeps the liquidity, and then we see momentum kicked into the markets. We have the reaction to the upside where price breaks structure to the upside. Now, where is your order block? The series of candles that swept the liquidity is your order block. And remember, order blocks doesn't necessarily have to sweep liquidity. Okay, I'm just teaching you my favorite one. This is actually the first candle and the second candle before price sweeps the liquidity. And from the two examples I've shown you guys, price sweeps the liquidity with 2 candles, but in some other cases it can be more than 2. It could be a lot of candles, right? So this is your order block right here, but the most important thing is make sure to refine your order block. Okay, you can do it in any way. You can look to trade from the main threshold, you can look to refine to smaller candles. In some other cases you can actually refine to this candle, and if you think refining to this candle and the candle is still very large, you can still drop to the lower time frame to refine to the lower time frame. Okay, it could be done where we look to drop to the lower time frame to also refine to the lower time frame. And trading from the main threshold is actually nice. And another thing you can actually do when price returns back to retest this order block is you can look for lower time frame confirmations. And there are different type of confirmations you can actually use. We have fractal confirmation, we have where we look for market structure shift on the lower time frame, a lot of entry types which can actually be used to trade order blocks. And I hope you understand the major thing I want you to understand about this particular topic. We have to see price sweep liquidity first. Okay, you have to see price take liquidity before the expansion. Now if price takes the liquidity, you're going to mark your order block and you're going to expect that price is going to retest and a continuation to the trend, right? Okay, so this is what we're going to see right now. Let's see few examples right now. So let's start with this particular price action we have right here. This is actually Cadchf, the 2 hours time frame. And marking your order block, always make sure you look at structure. Okay, so if you look right here, we actually have a very nice one. You can see we have price takes the liquidity at this low, and after the liquidity was taken, you see price reacts massively to the upside, and we have a nice order block right here. A lot of people is going to look to mark this area as the order block, and it's actually nice, but price failed to return to this particular area. But this is not actually the example I was trying to show you. This one right here is the one I'm trying to show you, and you can clearly see we have the liquidity sweep before we see price moving in the opposite direction. And just like I said, this is the type of order block I really want to see when I'm looking at the price chart. Okay, so from this already you know that price is actually in an uptrend. Cadchf is pushing to the upside, and this particular example I'm showing you was actually shared to my VIP community. So if you want to join, you can actually look to enroll for a mentorship. Link is in description. Okay, so let's do this quickly. So firstly, we have price pushing to the upside. We have the understanding, okay, price is in an uptrend and we're gonna look to trade in continuation to the uptrend, right? At this point, you're not looking at a reversal because price is what in an uptrend. Now at this point, what you see is price starts to accumulate at this particular area. Then we had this low being formed, price reacted to the upside, they pull back, another reaction to the upside before we see price drops to the downside to sweep the liquidity at this particular low. So this is where we had the sweep of liquidity at the low. You see price takes the liquidity at this particular low. So price sweeps the liquidity and we have the sharp movement to the upside. You see how price reacts massively to the upside. Now you know we have another block right here, and once price comes back to this level, we're going to expect what we call a mitigation. Now firstly, you're going to mark, you see these 2 candles that swept the liquidity. That's the 2 candles that pushed price to the downside to sweep the liquidity. This is actually your order block right here, and if you mark your order block this way, you're not actually doing it wrong. This is actually correct, but just like I said, the order blocks could be refined to this particular candle. When it's refined, you can actually look to trade from the main threshold, and if you're looking to trade from there, this is actually the 0.5% of the range. You could look to trade from this level right here. Some other people might actually look to refine to the lower time frame. So let's maybe drop to the 1 hour time frame. You know we are currently at the 2 hours time frame, so let's drop to the 1 hour time frame in case you still want to do your lower time frame refinements. So this is the 1 hour time frame, and from what you can see, we equally have a smaller candle. Now that we've dropped to the lower time frame, you see we have 4 different candles that swept the low. Now a lot of people might actually look to refine to the smallest candle right there. Okay, you're going to see some people coming, okay, I'm going to refine to this particular candle, and if you see people doing it this way, it's actually correct, it's still correct, but just that in some cases price might not actually get to your zone. You might miss out on this trade. You know, nothing is actually certain in the markets. So when I took this trade, I was actually looking at this particular zone, the one we had on the 2 hours time frame. This particular one, that's the zone I actually took my trade from. That's the zone I trade, but you can actually refine to the zone. I'm actually teaching you the whole thing. What you're going to do now is to press price forward and see how price reacts. And you see price comes back, a pull back to the upside. So personally, the way I trade, I'm going to mark this area as my inducement area. It's actually a nice inducement area for me, because a lot of people might think, okay, price is now reacting to the upside and they're going to look to buy to the upside, but this is actually a trap for me, and it's an inducement area which price could come back to sweep. And you see that price comes back, sweep that inducement area, sweeps that, now comes back to mitigate our order block. Now what are we seeing? We now start seeing the reaction to the upside. Price starts to move away. Okay, I think I should press price forward faster so you can go to the next example. Now you see price blast away to the upside, and you see that massive reaction. Price mitigates our order block right here, and you see how price blasts to the upside. Okay, this is how order blocks works. Okay, when you trade from the right order block, you're going to make good money from the market. So this is actually the first example. So let's see the second example right now. So here is the second example, and this is Gbpusd, and this is actually the 2 hours time frame. Now from what you can see, GBP has been in an uptrend. We've won a couple of trades on GBP and we've actually lost some. You know, we've talked about GBP this year. Earlier this year we talked about GBP. We've been doing some price actions on GBP where I usually break GBP down for possible trading opportunities before we jumped into talking about the London session strategy. Then I think I talked about top analysis before I'm talking about this particular order block right now. Now from what you can see, GBP has been in an uptrend, but at this point we start seeing that reversal to the downside, where here could be seen as a shift in structure, because this was a pullback, even though it wasn't actually deep pullback. But I think price shift in structure, and now we're seeing the continuation to the downside, which tells us, okay, price is now in a downtrend, right? Price have shift in structure, right? Now we had a mitigation right here where price comes to mitigate an order block. Okay, so that mitigation is actually a nice one, and that's a very nice order block. If I try to zoom in, you're going to see it's actually a very nice order block. But just like I said, not order block necessarily have to sweep liquidity. What I was actually focusing on was the order block that sweeps liquidity, because it gives me the best trades. Okay, so that's what I was talking about. Now at this point, what you can see, we have the reaction to the downside when price mitigates this zone. Then during the mitigation, you see how price react massively to the downside, and you can go ahead and mark here as your break of structure. So price broke structure right here, and we've seen price actions that are not actually nice right here. Now what you're going to do right now is to look for your order block, that is the liquidity sweep pattern, before you select your order block. Now at this point, what you can see is that price sweeps the liquidity at these highs, because you see we have this relative equal high at this point, and price actually sweeps the liquidity. You see this 1, 2, maybe 3 candles that push to the upside to sweep the liquidity at this particular high before we start seeing that reversal to the downside. Okay, start seeing this reversal. So this is actually a very nice one, and what you should do at this point is to select your order block. Now here is the order block. Remember I said the series of candle that swept the high is your order block. Now this is the correct order block right here. If you're actually looking to trade from your order blocks, this is actually a very nice order block, but just like I said, there is need for zone refinement. So you can actually go ahead and refine to different areas. You can refine to this particular candle. Okay, let me do the refinement so you can see that. You can look to refine to this particular candle based on personal preference. You can refine to this particular candle this way. And another thing you can actually do is you could refine to this particular candle right here. Okay, these are the ways you could look to refine your candle, but looking at the main order block, this is what your order block looks like. But make sure you refine your zone. Okay, I'm actually advising you, I always refine my zones. So if you're looking to trade order blocks, try to refine your zones too. Okay, so these are zone right here. We've selected the order block. What you're going to do is to press price forward and see how price reacts, and you see price comes back, mitigates the order block, and you see how price reverse to the downside, and you see price actually still reversing to the downside. So this is how order blocks works, and it gives high return. And what you're going to notice is if you actually refine to the last candle, you actually missed this particular trade. You see, if you refine to the last candle, which is what I actually did, that should be told, I refined to the last candle when I was looking at this pair, and this was actually shared to the VIP community equally. So personally, I missed the trade, but I think some of the students who didn't actually refine with me to the last candle, they got an entry and they took this trade to the downside. So this is it about order blocks, and I hope you're going to backtest this. It's not just about learning order blocks, learning. What you also have to do is you have to backtest, try to develop yourself personally, and try things out on your own to see if it works. Okay, you know, one of the problem people have is they just learn without trying to implement and backtest. So I'm just go straight into trading this without trying to see if it works. So this is an assignment. Go back now and do your personal backtest and try to know if what you've learned right now actually works in the markets. So do that quickly. That's it, and I hope you got value from this. If you're new to the channel, consider subscribing to the channel. If you have interest in joining our free Telegram community, the link is in the description and you can look to join us today. So thanks very much, and see you in the next lesson.